and welcome to another segment of Accounting 101. My name is Dr. Annette Moultrie, and let's see what we have in store for you in this video. But before we proceed with the video, I need you to click on the subscribe button. Click on the thumbs up button below. Also, click on the notification bell so you'll be notified of upcoming videos. Here we begin part 2 of chapter 7, the Accounting Information System. Part 2 of chapter 7. We will begin with learning objective 7.3. Journalize and post purchases, cash payments, and other transactions in a manual accounting information system using special journals and subsidiary ledgers. How are purchases, cash payments, and other transactions recorded in a manual accounting information system? A merchandising business purchases merchandise inventory and other items such as office supplies, equipment, and furniture on account. The purchases journal handles these transactions plus other purchases incurred on account. Cash purchases are not recorded in the purchases journal. They are recorded in the cash payments journal. Again, cash purchases are not recorded in the purchases journal. They are recorded in the cash payments journal. Here in this exhibit, it illustrates a purchase journal. You have panel A and posting to the ledger in panel B, which will be shown on the next slide. The purchase journal has special columns for credits to accounts payable and debits to merchandise inventory, office supplies, and other accounts. The other accounts debit columns are used for purchases on account of items other than merchandise inventory and office supplies. This business uses a perpetual inventory system. In a periodic system, the merchandise inventory debit column would be replaced with a column titled Purchases Debit. Here is panel B, posting to the ledgers. This exhibit shows the posting to ledger accounts from the purchases journal. Entries from the purchases journal are posted daily. They are posted daily to the accounts payable subsidiary ledger and are posted monthly to the general ledger. On November 2nd, the business purchased merchandise inventory costing $700 from Haynes Textile on account. Here in this slide, it shows the journal entry if the transaction had been recorded in the general journal. By recording the entry in the purchases journal, the transaction can be recorded on one line. The vendor's name, which is Haynes Textiles, is entered in the vendor account credited column. The purchase terms of 3/15 and 30 are also entered to show the due date and the discount available. Accounts payable is credited for the transaction amount and merchandise inventory is debited. Businesses make most payments by check, and all checks and payments of currency are recorded in the cash payments journal. The cash payments journal is a special journal used to record cash payments by check and currency. This special journal is also called the check register and the cash disbursements journal. Here in this exhibit, it shows the cash payments journal, panel A. And in the next slide, you'll see the posting to the ledgers, which is panel B. The cash payments journal has two debit columns, one for other accounts and one for accounts payable. It has two credit columns, one for merchandise inventory, for purchase discounts, and one for cash. This special journal also has columns for the date and the check number of each cash payment and the account debited. Here, this is panel B. It shows the posting to various ledger accounts from the cash payments journal. On November 15th, the business paid the vendor Haynes Textile on account with credit terms 3/15 and 30. For more details, you can see the first transaction in the purchases journal, which was Exhibit 7-6. Now, paying within the discount period allowed a 3% discount or $21, and the business paid the remaining $679. Here in this slide, it shows the journal entry if the transaction had been recorded in the general journal. Instead, the business will record the transaction in the cash payments journal. The entry will be recorded by entering the $679 in the cash credit column. The accounts payable debit column will be recorded for $700, and the discount of $21 will be entered into the merchandise inventory credit column. All transactions involving cash payments are recorded in the cash payments journal. Entries in the cash payments journal are posted daily to the accounts payable subsidiary ledger and monthly to the general ledger. To review accounts payable, companies list individual vendor ending balances in the accounts payable subsidiary ledger. The general ledger and subsidiary ledger totals should agree. And here you see the accounts payable credit balance, $2,057, is equal to the subsidiary ledger accounts payable balance of $2,057. They agree. Special journals save time. They save time recording repetitive transactions. But some transactions don't fit a special journal. Examples include the adjusting entries for depreciation, the expiration of prepaid insurance, and the accrual of salaries payables at the end of the period. Companies also use the general journal for sales returns and allowances and purchase returns and allowances. All accounting information systems need a general journal. The adjusting entries and the closing entries are recorded in the general journal, along with other non-routine transactions. As we have seen, a manual accounting information system involves 5 journals: sales journal, cash receipts journal, purchases journal, cash payments journal, and general journal. It is important to remember that transactions are recorded in either one of the special journals or in the general journal, but not both. Here in this Exhibit 7-8 provides a summary of all 5 journals that will help you decide which journal to use when recording transactions in a manual system. Learning Objective 7.4. Describe how transactions are recorded in a computerized accounting information system. So how are transactions recorded in a computerized accounting information system? Well, a computerized accounting information system has 2 basic components, hardware and software. Hardware is the electronic equipment, including the computers, monitors, printers, and the network that connects them. Most systems require a network to link computers. In a network system, the server stores the program and the data. The network is a system of electronic linkages that allows different computers to share the same information. Software is the set of programs that drives the computer. Accounting software reads, edits, and stores transaction data. It also generates the reports that businesses can use to make decisions. Software is a set of programs or instructions that drives the computer to perform the work desired. With increased availability of affordable computerized accounting information systems, more and more businesses are completing all their accounting on computers. Now, 2 popular entry-level software packages are QuickBooks and Sage 50 Accounting. These programs allow businesses to enter sales of services and merchandise inventory. In addition, these programs can record expenses and produce reports such as financial statements. These computerized accounting information systems are relatively easy to use, often requiring little knowledge of accounting or GAAP. Computerized accounting software allows businesses to organize finances, track sales and expenses, and complete all record keeping. Larger companies often use enterprise resource planning, or ERP systems, to manage their data. ERP systems such as SAP and Oracle can integrate all company data into a single database. An ER system feeds the data into software for all company activities, from purchasing to production and customer service. Advantages of the ERP system include reduce operating costs, help companies adjust to change, replace separate software systems such as sales and payroll. However, there are some disadvantages of ERP system. ERP could be expensive. Major installations can cost millions of dollars. Implementation requires a large commitment of time and people. Many ERP systems and entry-level systems can be offered in the cloud. With cloud computing, software and data are stored on a third-party server instead of by the business and can be accessed by employees via the internet Cloud computing can significantly reduce costs for many businesses. Suppose that on June 23rd, Smart Touch Learning performs $3,000 of services for Richard Mature on account. To record this transaction in QuickBooks, Smart Touch Learning needs to create an invoice for Richard. Notice there are no debits, there are no credits on this invoice, as you'll see in the next slide. In a computerized accounting system, the business does not have to record the transaction in a debit and credit format. Instead, by creating the invoice, the software knows automatically to record a debit to the accounts receivable, share, and a credit to sales revenue. Now, after creating the invoice, the software automatically posts the transaction to the appropriate general ledger accounts. There is no need for the business to manually post the transaction. The software takes care of the processing for this particular transaction. Here again, you see an invoice that we discussed earlier. Smart Touch Learning creates the invoice for Richard Mature for $3,000. An invoice includes various items such as the customer's name, the customer's address, okay, and the invoice number. It has the date. It has the payment terms, the quantity ordered, and the balance due. When a business records a bill received, it uses the vendors tab of QuickBooks. So suppose that on June 25th, Smart Touch Learning receives $580 bill for utilities. Here in this exhibit, it shows the bill that the company records in QuickBooks. This is the bill. When Smart Touch Learning saves the bill, the software automatically records a debit to utilities expense and a credit to accounts payable, Smart Energy. A bill includes the vendor's name, the vendor's address, the payment due date, and the total amount due. QuickBooks has the ability to produce numerous reports, such as income statement called profit and loss in QuickBooks. It also can produce a balance sheet, and a statement of cash flow. QuickBooks also can be used to create accounts receivable and accounts payable aging schedules. Here you see in Exhibit 7-11, it shows an example of an income statement for Smart Touch Learning. This is a QuickBooks income statement. And as I mentioned earlier, it's in QuickBooks for Smart Touch Learning and for any other companies, it will list it as profit and loss in QuickBooks. Okay, so this is the end of Chapter 7, Part 2. Part 2 of Chapter 7, the Accounting Information System. And this also concludes Chapter 7. Thank you for watching. And please, if you haven't already, please click the subscribe button below.